Welcome back, Outfinders. Hope everybody's having a terrific Thursday. We are seeing a little bit of good bullishness on the market today. SPY currently up 0.5%, but we're seeing some pretty good rotation out there. Big tech stocks not really performing all that great, and I got another chart to kind of show you in a comparison fashion. So we'll see just how things are kind of really going out there and where the maybe the best opportunities are out there right now. A nice little gap up here, 0.1%, a little bit over 0.1% or so. Traded higher initially, first 45 minutes or so, and then we pulled back for about 30 or 45 minutes, and then just steady uptrend since then. So about an hour and a half into the day, market finally figured out what it was going to do. We've kind of just been steadily grinding higher. So there you go. That's kind of what the SPY has been doing. Here's a look at the Qs. Q's been a little bit more sell happy in the morning. Nice little gap up here. Sold down for about the first hour and a half. And then the Q's kind of found its legs. Kind of traded higher. Got back up to the daily high at least. IWM, though, check this out. Nice gap up here on the IWM. Hey, buddy, 0.9% of a gap up. Traded higher there the first hour or so, pulled back for about 45 minutes. And then ever since the Qs and SPY kind of figured out what they were going to do, you see the IWM kind of figured out what it was going to do. Kind of just been trading higher here the past couple hours, looking pretty good. The DIA, nice gap up, kind of been slowly trickling higher throughout the day as well. RSP pushing higher first part of the day, been mostly kind of flat for a good part of the day. Past 45 minutes looking pretty good there on the RSP. All right, so the RSP has come all the way back, gotten back to the weekly highs after that huge gap down we had on Tuesday. So there you go. Even though it was like a false breakout on Monday, people still took the opportunity to buy it up on any kind of dips, so looking pretty good. So we're seeing the market kind of broaden out in some form or fashion outside of the big tech areas. DIA pushing higher, IWM also pushing higher. Kind of mentioned this at the start of the week. I thought we would make a run up to this, but I wasn't sure after we had that gap down on Tuesday, but it looks like we are going to make a run up to this 205, 206 level, so that looks pretty good. Going to happen. Q's very lackluster. So if you're noticing the difference between the RSP, the DIA, and the IWM, Q's kind of lackluster here the past couple days after that gap down, especially today. You know, the IWM's up 2.5%, the RSP's up over 1%, the DIA's up 0.85%. Q's rolling up 0.3%, and they spent a good part of the morning negative. Hasn't gotten back up to Monday's high. So Q's are getting a little, not top heavy, but I mean, just lackluster. Very lackluster right now. So SPY also kind of lackluster. That's what happens when you have such a large concentration of market cap in a few particular set of stocks, and then they don't perform. You get SPY underperforming pretty good there compared to the RSP, DIA, and IWM not getting back up to that Monday high yet. So real quick, we'll just run through some of these big tech stocks. And you see AAPL's down over 1%, Microsoft down 0.9%, almost down 1%. So yeah, a lot of these not looking the best. Here's Alphabet gap down, traded down. You're kind of thinking to yourself, okay, these three, this is Alphabet down 2.5%. These three, how is the Q's even positive? Well, there's a few stocks. Meta is continuing to push higher, up 2.9%. So that kind of offsets Alphabet there. All right. And then we got Amazon. It's down roughly 0.75%. So, not looking as bad as Apple and Microsoft, but definitely not looking good. And then you got TSLA TSLA up positive, very strong day, up 4.5%. Kind of mentioned, this yesterday, inverted head and shoulders. Are we going to break this neckline? Yeah, we clearly broke this neckline. Take a look at this intraday kind of time period. We very quickly took that first hour, kind of got above this 193 level, and look at what we did in the second hour. The third 30 minutes, I guess. We pulled back right kind of into that zone, and we just bounced and took off. So that might have been a little bit of the pullback. Maybe we kind of continue to push higher from here. If we get a quick pullback tomorrow, kind of start the day, I would be looking to probably buy it, be a buyer on that. But that's TSLA. But check this out. So I was looking around a little bit and taking a look at the Qs compared to China Qs. And this is a very interesting kind of look here at, the different tech sectors, between the U.S. and China tech sectors. And you can see just how much the Qs have absolutely just outperformed the China Qs, especially over the past year. Over the past year, they have so much. So I'm not one to say that this is the top, but I can understand and imagine a huge rotation out of the triple Qs and into the C triple Qs. So, not to say that there isn't good Chinese stocks, especially tech stocks out there. There are really good ones, and that was kind of the reason why I wanted to look at this relationship. Is we've seen Baba and Baidu are just at hugely discounted, like majorly discounted levels. And, U.S. tech stocks, they're pretty stretched valuation type metrics. Does that mean that U.S. tech stocks don't continue to push bullish? I mean, yeah, maybe. Is it going to be aggressive? I don't think so. I think there's much better areas to probably just be looking to find better opportunities out there. So, anyways, this is a very interesting chart. I just kind of wanted to show this off. All right, take a look here at the VIX. Not too much kind of going on here today. It's pretty much flat. Market's up. VIX isn't really doing anything. Kind of bouncing off the moving averages there a little bit. So maybe we'll see the VIX continue to push higher tomorrow. Be interesting to see if that happens. DXY, the dollar. Didn't expect to see the dollar kind of drop off as much as it was. And it's so interesting, seeing the market move the way it has here over the past 2 days, popping as bullshit as it has, especially the dollar dropping off. Yields are dropping off. I haven't got to that yet. But, dollar dropping down, coming back, basically kind of where it was just before we had, the CPI numbers Tuesday morning. So kind of bouncing off that 10 EMA there. And it's like that CPI number just came out 2 days ago. So like what's different in the market now? So it's not like that was like a number from 6 months ago. So it's just an interesting the way the market works sometimes. GLD up, dollars down, makes sense. Kind of could be retesting them right here into the bottom. This is why I kind of thought for a while, it's like I think we're just gonna be in a steady, longer term kind of basing pattern here. And I still think that. I don't think we're gonna see major bearish moves. I think any kind of bearish move is gonna kind of be bought with dip buyers. 10-year yield. So yields. This is what's very concerning here about yields. So we had that breakout moment on Tuesday, Wednesday, Thursday, pulled back, and look at where we bottomed. We bottomed right where we had topped through previous points of February and January. It's also where the 10 EMA was. So yields are looking pretty good, man. I mean, I get it. The past day and a half, they've pulled back some. But, I mean, you can see that low today. We got down there. We just kind of hit right into the previous highs that we had over the previous kind of month or so. You can see right there, right all these highs. That's exactly where we kind of tapped into this morning, and we just kind of bounced pretty hard there for the next couple hours. So, it'll be interesting to see what kind of happens tomorrow. But it's kind of interesting to see the yield and dollar actually have pulled back to kind of where they were pre CPI numbers ish, or almost all the way back. And you saw the stock markets kind of getting back up to those pre CPI type levels. 10-2 inversion, not really doing a whole lot, just kind of hanging out still. So yeah, there you go. HYG, so yields are down. HYG, have a nice little day. Still kind of in the sideways pattern. The one thing you got to be very careful of here is you do have these lower highs coming in right here. So we're getting kind of close to where that trend would be. We did very briefly break down this, this early January low. So it could just be a little bit of a rally here. Maybe we come up to that line, then we roll over. It's quite possible. It's going to depend a lot on yields, obviously. So you're probably, trying to analyze yields and analyze bonds as well. But yeah, we'll see here in the next couple of days. If we were jacked off that downtrend line, I would imagine HYG is going to keep probably dropping, get back below. LQD. Yeah, just kind of retesting right up into these moving averages. That's about it. That's all I got. Just retesting up into some moving averages today. Has traded lower from there. There you go. TLT. So TLT has a little bit of a false breakdown here. So this is kind of interesting. Obviously Tuesday had a little bit of a breakdown. Wednesday kind of a bounce back. Thursday got back above. This previous low that we had in kind of late January. So it's a little bit of a false breakdown. We'll see. Moving average is still kind of downtrending. So it is still a downtrend. If we get back through these moving averages, maybe it's not looking too bad to be bullish on the TLT. I think it's going to coincide a lot with what yields are probably doing, though. That's what you're probably looking at. Take a look at sector rotation. All right, so sector rotation, you got Tech, XLK. Looking pretty good there. Yeah, big weight, just a big anchor. It's kind of a pain point. I mean, you see all the other sectors doing really good, but man, that tech, that's the only sector that's negative on the day. You got industrial, staples, and healthcare barely outperforming. You also have discretionaries and communication outperforming as well. Utilities outperforming. Financials, materials, real estate, and energies kind of wrap up the upper end of the day. Let's take a look. If we take out the gap, energies have seen a lot of intraday buying. Energies looking pretty good there. XLE. Financials, communications, materials looking pretty good there. Real estate, okay. Utilities, barely outperforming. So are discretionaries. Healthcare is barely underperforming. Also with hold on. So no, healthcare is kind of in line with the market right there. Industrials barely underperforming. Staples underperforming. And tech underperforming. Okay.